Hi everyone, 𝗖𝗣𝗶𝘁 here with CPI Capital. I'm joined by 𝗖𝗑𝗶 Benesocky. Welcome, Eva.
Thank you, August.
We host the CPI Academy YouTube show dedicated to adding value to our viewers' investment journey. We bring on experts and discuss all topics related to real estate investing. Please subscribe and like the video because that helps a lot. And we hope you enjoy the video today.
Yes, and today we're really excited because we are going to be talking all about private equity. And we are joined by Rick Couronne and Larisa Wells. So welcome.
Hi, thank you.
Welcome, guys.
Welcome, welcome. So we're really excited to have such experienced private equity professionals with us today. So why don't we start off by taking a step back and having both of you tell our viewers about your start in private equity and what you're currently up to, please.
Would you like to go first, Larisa, or would you want me to?
Thank you, Rick, for your offer, but you go first.
Okay, so I've been in the investment industry for 26 years on the public market side. And a little thing, I always believe in treating people good because one day you could be working for them. And so 9 years ago, I was approached by a president, a broker that I had mentored to join private equity, and I'd always been in the public markets. And when he said private equity, I was like, wow, I was actually a pro trader at one point for a little company, which is now called JP And so 26 years on the the public market side, where I held various positions: pro trader, floor trader, desk trader. I was a stockbroker, VP of sales. And so when I first joined in the private equity space, I joined as a consultant. And so he had a little project that he wanted me to work on. He needed about 600 people contacted. And it seemed a lot of people in private equity were nervous. They thought that was a big undertaking, where in the public markets, that's a week's worth of calls. So I started out as a consultant and then decided I really liked private equity. A lot of my clients were looking for yield without the volatility of the public markets anyway, so it was a good fit. And then I became a dealing rep, which means really like a stockbroker in private equity. Then I became vice president of sales and marketing. And then I became president and CEO in UDP. My strength really is in connecting, and I love working with clients and connecting. And I came across this lady, and she had the most powerful CV that I'd ever seen. And, PhD in mathematical economics, brilliant lady. She'd been a professor at the University of Michigan, professor at Massey University, and just was a rock star. And so I was fortunate enough to bring her on to work with the firm I was working with at that point. And then after about a year of working together, we actually became partners. And so she's the smart, really smart one. I'm more of a blue sky, everything's blue sky, and she pulls me down and says, let's look at the numbers. And with that, I'll pass it over to Larisa Wells before I take all her thunder away from her. So that was my journey into private equity, and I'll hand it over to you, Larisa.
Great, thank you for that. Go ahead, Larisa, please. Excited to listen.
Thank you, Rick. Definitely, I'm blessed working with Rick. He's an astute investment strategist and brings decades of experience and his expertise in both markets, private and public markets. Also, he brings wealth of relationship across the country, and definitely I never met such an amazing person like Rick, and totally enjoying working as a team, and we've been definitely delivering great results, and we've been making teams stronger and stronger every year, I guess.
Incredible. No, just hearing about your credentials and how both of you and the amount of respect that you have for each other, it's great to see that for your partnership to form. But maybe before we get into any other questions, tell us about your past experience, Larisa, and that experience, you utilizing that experience in the world of private equity, where numbers are an extremely important part of this industry. Talk to us about that briefly, if you may, before we get into the nuts and bolts of everything.
Rick mentioned I spent 20 years doing research and playing with numbers at university levels, and I worked at the University of Michigan University, having a contract there for a couple of years. Definitely numbers make total sense for me, and we provide due diligence of products and for our clients and issuers, and we definitely as Rick mentioned, we provide deep and due diligence on our products, and just to be able to mitigate risks really well. And we truly know the space. I started working in private equity 5 years ago. And always, I mean, it wasn't the first really work. Definitely touched it like 15 years ago, but really deeply dived 5 years ago, and absolutely enjoying. We know the space really well. We know how to do business. We take pride in our services, and we've been delivering great results.
Great. And we're gonna extensively kind of dissect the importance of underwriting and due diligence on product and how those numbers and analytics are a key component of all those items. But
yeah, and maybe we can start off by, could you, either one of you, maybe explain what an EMD broker, exempt market dealer brokerage is? And not to answer any questions, but the way I like to put it is I've been a real estate agent. I was a real estate agent for a decade, and I hung my license at a licensed RE/MAX. So the RE/MAX was the brokerage and I was the broker. So in my industry, we were overseen by the real estate council or the real estate board. So using that logic, can you please explain what an exempt market dealer brokerage is?
So an exempt market dealer is just, all it really means is exempt from doing a full prospectus. And what that allows is obviously a little quicker to get capital. But what it also has done is it's broken down, because before in private equity, you'd need a $10 million minimum typically to get in. And so the exempt market now has brought that to the average investor. Obviously, a lot of the investors we deal with are accredited investors, but it also brought it to the eligible investors, and it's broken down. So it's created a great opportunity. And actually, I would like to run through a couple numbers. So I don't think people realize the size of the private equity. If we look at, and when I was a head trader, I'd always say, follow the money. Where's the money going? And so if we look at Canada Pension Plan, which is obviously one of the largest pension funds in Canada, $87.7 billion of their money is in private equity, 32.7 billion is in private credit, and 47.5 billion is in real estate. So I think that really shows a lot of where they're putting their money, and they've increased their capital investment into private equity, into those sectors, by 400% over the last little while. So I think one of the things we have to do is get out and educate clients, because there's a huge opportunity. And when I was a stockbroker, typically, it was 60% public market, 40% private, or 40% bonds. And that new market now is 40% private and alternatives, and 30% bonds, 30% stocks, and whatever that mixture may look like. But I think the average investor is missing out if they're not in private equity. Obviously, we believe that you should be in both. But if you're not in private, you're missing a lot of opportunity for growth and income.
No, absolutely. And that old way of thinking of the 60-40 split, the stocks and bonds type of split is definitely, archaic, especially when you're looking at the top endowments. They're also kind of have diversified their investments into a portion, even into venture capital, definitely real estate. And talking about the Canadian Pension Fund, they're actually partnered with a U.S. operator, Greystar, I believe, Greystar Property Management, to purchase multifamily, the space we're in. So super excited to discuss that. Also, I want to kind of get into later on about kind of the most the one negative that the public markets look on the exempt market, which is liquidity. And we're going to discuss that as well in a moment here. But
now, let's maybe touch on this extremely important topic that I would like to take some time and discuss. Maybe you can please go over the benefits of having an exempt market dealer or dealing rep, such as yourselves, involved in raising capital for a deal from an investor's perspective. So because you guys put us through this rigorous process of know your product.
Us the issuer.
If you will.
No, for sure.
For the benefit of investors that you work with, maybe you can expand.
Do you want to take that, Larisa, or do you want me to keep going?
Well, I can start with maybe a little bit background of private markets, right? Like historically, private equity investing has been the exclusive domain of less than 1% of the investment universe. And basically it was institutional investors and the ultra wealthy only, right? And what we are doing, we are providing access to all investors, the rest 99% investors, to private companies. And we focus on areas of the market where that is undercapitalized, and that's our way to capture hyper growth for companies and at discounts and to drive returns for our investors. But again, last 5-7 years, basically, investors started getting the access, and that's the access to private companies at the beginning we provide. And that's how we capture all the better returns for investors. It's just a little historical, kind of look at the markets. Rick, you go.
Well, and so there's two things. First of all, it's KYC, is know your client, understand the goals. What are they looking for? What is their risk? And fitting that in, and then doing the KYP, which is know your product. And so obviously a firm does very thorough due diligence as well, but we also do our own as well. So we take a deep dive, and even though, there may be 20 companies at any one time that we're investing in, we might only pick 5 or 6 of those we're very comfortable with. And we certainly love the multifamily space. We love dental. I mean, we're doing a dental roll-up, car wash, storage, government mandated businesses. So there's a diversified portfolio that we can put together, but typically about 75 to 85% where we're getting the bigger returns, and it's secured against a hard asset, which is real estate. So love the multifamily space. Centurion is one of the bigger ones in Canada, but I think there's more growth and more opportunity in the States. And certainly, those states of Florida and Texas are very dynamic and a lot of opportunity there. And so that's why we're obviously talking to you guys and looking and doing some due diligence and looking to work together. So we're excited to be working as a team with you guys as well. So
absolutely, that's great.
Fantastic.
Yeah, and just for me to kind of briefly look at this as from an investor perspective. So when I work with a firm like 𝗖𝗽𝗶 and Rick and Larisa, the number one is that I have to be approved to be able for certain investment. I can't have $10,000 in my account and that's the last money of that I have to my name, and I want to invest that in a possibly risky venture capital deal. You guys right away will kind of assess the risk and get an investor to go through an application process to be able to possibly invest in these investments. I'm guessing.
Yeah, no, we actually do a thorough, and we have, everything is looked at by a compliance officer as well before it would be approved. But obviously we want to do what's best for the clients. And, if something's a 7 or a 10-year hold, so typically a development project may be that long, it's probably not the right investment for an 81-year-old when they're looking for income, right? So it's obviously got to fit the client first and foremost. What are their goals? This is not about what we want to do. This is what fits for the client, and then move forward from there. And again, that's going to be reviewed by compliance before it be approved as well. So not only are we making sure we're fitting for the client, but also it's overseen by compliance and regulatory regulations, which is very cool.
And now on the opposite side, on the issuer side, we are issuers, and for us to be accepted and for us to be able to be for our offering to be available on your shelf, and I think Ava asked a few questions about that.
There's this term called shelf.
Yeah. So for us to be able to be on your shelf and be offered to investors who come and get service through you, we have to go through a rigorous process to understand that investment makes sense. The team has the experience and background needed to conduct a business plan that is needed. So maybe briefly talk about that as well, Rick, about the process.
Sure. So, I mean, obviously you guys are going to see what you're going through as well to get approved. It is a deep dive. I mean, first of all, it's always management. First of all, because if management can't execute, I mean, the project's doomed from the beginning. So obviously it's very thorough with that. And then secondly is what are the project, what is the opportunity? And then we go from there, but there'll be very, very thorough due diligence is done. You're probably going to, it's typically 2 to 6 weeks. We try to get it done as fast as possible, but, to do thorough due diligence. And myself and Larisa have done some due diligence where we actually personally flew down to Houston and then ended up in a hurricane looking at a project down there. But we've also were able to fly to the Cayman Islands because that's what we'll do for our clients. And we actually flew there to look at a project as well. We like to put our feet on the street as well and see the project. Obviously, we can't fly everywhere to see that, but obviously you know what you're going through as far as due diligence with this. I don't know if Larisa would like to add to that, where we got caught in the hurricane in Houston.
Oh no.
Yeah, Texas is known for that, and is also known a lot of big, like, again, we're in the multifamily space, and a lot of big operators are actually moving out of Texas because of those issues with damages that can be caused as a result of hurricanes and the hailstorms they got there. And the insurance that has gone up. A lot of big insurance firms have completely moved out of Texas, and the ones that are there have increased their rates. So now that kind of decreases the NOI. But another topic to get into. Maybe we could possibly.
Yeah, no, for sure. This is going to be a fun one to chat about because you both have lots of experience in this. But at CPI, because we're a newer firm, we've spent the majority of our time kind of cultivating and nurturing our new kind of formed relationships with investors. And being in this private equity world, I'm now even maybe reaching out to some rich uncles that I haven't spoke to in a while. Yes. But maybe you guys can please talk to us as dealing reps. How do you guys take care of, build these relationships and nurture them, as this business really is about the know, like, and trust?
Well, for myself, being in the investment industry for 34, 35 years, I've always had a book of business and clients. And then we do get a lot of referrals for people wanting to deal with us. People that, if Larissa's out at an event, we do a lot of sponsorship as well. We believe in doing good is good business. So we've sponsored some different things where, the Heart and Stroke Foundation, Sabakal Indian Music Foundation, Red Cross. So we do believe in giving back as well, but we sponsor a lot of stuff. So I think just based on my 34 years, we've got a lot of relationships with some high net worth individuals that I've worked with in the past. Larissa's a great networker, and we've got 3 or 4 different advisors now that's saying, hey, we're looking to exit and we want you to take over our book of clients because we trust you and we want to work with someone that's knowledgeable and that can answer these questions on investments. So I don't know if Larissa, you want to add something to that?
Well, yeah, definitely. It's not only about being so fortunate, right? But obviously, we've been providing great results and great services, right? And yeah, I'm blessed about that.
For sure. And talking about those services, I mean, Rick, just a moment ago talked about you guys actually flying down and looking at an investment opportunity for your investors. I mean, that's huge, but it's somewhat a common item that brokers and exempt market dealers take, put their issuers through. And I guess it brings us to my next question. So CPI is a real estate investment firm that partners with Canadian investors to acquire US multifamily assets. These are more about the value add model where we go in and do small renovations and try to force appreciate the asset and exit in 3 to 5 years. Now, CPI as an entity and its principals go through a KYP process with you guys to be vetted, but not now, just because they got vetted, any subsequent deal that CPI is looking at, that deal also needs to be underwritten by you and your team. And that's where Larissa's math experience comes in, especially in multifamily and kind of the analytics parts of it. But yeah, discuss that item with us as well, if you may.
Well, just because, an example, there's a car wash company that's been doing, storage. They've been doing very, very well. But, on their 4th project that they brought to us, we did a deep dive and we just thought, this is not right for our investors. So just because we have that relationship doesn't mean the box is automatically checked. Because we have the relationship, we want to work with good companies moving forward, but it doesn't automatically just mean, hey, we've done this together before, it's all great. Every project does have to stand on its own as well. But obviously the most important thing is now we know you as a management team, we know how smart you guys are and what you do for due diligence. So we're comfortable with that model, but now let's look at the project and does that project make sense for our investors and clients? So it wouldn't be an automatic check the box, we've dealt with you in the past. However, because we've dealt with you in the past, we're certainly want to continue to work with you as long as the investment in the project makes sense.
Great point.
Fantastic. And I heard you kind of talking about car wash opportunities and so forth. So a quick question for you. Are Emd Brokerage Houses focused on certain industries? So for an example, real estate focused Emd or mining focused Emd or a venture capital focused Emd, et cetera?
Well, EMDs in the past, and some companies would become an EMD just to sell their own project, which is a bit of a conflict. So, there may be centered. I mean, we like to create really a menu of diversified projects so that we can actually, put a client and diversify him where we think they should be. So, if something makes sense and we see a sector, but we're also advisor receptive because we look at our advisors as our first clients. So what are they seeing out there? What do they want us to look at? What is making sense? And we've got, 55 advisors across Canada. And, we got one guy that's stuck in Switzerland right now. And so, we could possibly look at something like that as well. But, what are clients looking for? Are they looking for growth right now? Are they looking for income? And how do we make that portfolio fit for the client? So there is some EMDs that would just be typically focused on real estate, but we look at typically 20 different sectors at any one time. And, we may have one or two multifamily projects, but we're not going to have 10, because we want to make sure if we're behind CPI, we want to make sure that we can fund them and work with them. And if we're trying to do 10 at once, we're not going to benefit the clients, because now how do we perform? Because the money's scattered so much. We feel that we really pick the best in breed in any of the companies we deal with, because we're not aligned that we have to deal with anyone. Like if I work for Suncor, I'm only telling you Suncor is the best company to work for. And I'm not saying they're not. They're a good company as well. But we actually have a relationship that we really pick. We feel we're picking the best companies in that sector, and that's why we're looking at and working with them.
That's great. Great for your investors. They cherry pick the best deals and present them.
Absolutely.
Fantastic. So why don't we talk about securities a little bit?
No, why don't we talk about, because the point that Rick just made was,
Yes.
was the broker, all the 50 or so brokers across Canada, even internationally. And as we know, unlike the US, where the securities compliance is governed by one body, being the SEC, here in Canada, we have provincial securities commissions. So every province has its own securities commission. They have different rules. They're very similar. We also have national instruments, which is across the board, I believe. But now talk to us about that. So if someone is a dealing rep here in BC, can they service an investor who's from a different province, and vice versa? If a broker dealer is in BC, can they service a issuer from different provinces? So if you can expand on that, Rick or Larisa, will appreciate it.
Sure. I mean, we're registered, myself and Larisa. I mean, we can get registered in any province we want to work in. I just want to make sure that we can serve those clients. So right now, myself and Larisa, we have clients in Ontario, where we're registered. We're registered in Alberta, which is where we are right now. And then I also have a second home in BC, and we're registered in BC. So typically the majority of our clients are in BC and Alberta. But we can get registered across Canada if we'd like, but you want to make sure you can service those clients. And as much as Zoom has changed the world right now that we used to have, it's nice to be able to fly out to Toronto and meet with those clients and sit down with them and face to face and build that rapport with them. So an issuer can get registered across Canada with any EMD, wherever that EMD may be. And as far as an advisor, he can get registered across any one province as well. But typically, our major regulatory person right now is the AMF in Quebec. And when I used to work with an EMD here in Calgary, then it would be Alberta. And then there's also the IROC and the MFDA. So there's 12 different regulatory bodies in Canada, which we're trying to get. Would be great if they were all one. So the rules would be applied. They're similar, but they're not identical in each province. And BC is the most open for business. I think Ontario is probably the most restricted.
Okay.
Great. Yeah. And if you could explain a bit about IROC. IROC is more in the public markets, I believe, or if you can kind of expand on that.
Yeah, sure. IROC is just, Larisa would know this as well, is just typically stockbrokers. So that's the public markets is governed by IROC, and then the mutual fund is by MFDA, and then the exempt market, we have an SRO in every province.
Got it. Great. Awesome. Great. So now maybe we can switch the conversation a bit about liquidity, the Achilles heel of the exempt market. So most of these investments in the exempt market, most I could say some, I could say most, they're structured in a limited partnership where the investors are limited partners, they have limited liability, and there is a management team, a general partner that manages the project for a portion of the profits. So as far as liquidity, when you invest in a limited partnership or in an investment where there is limited partner and a general partner, the general partner makes a decision of when to exit the asset or any kind of major decisions that are made. And the investments in these assets are not liquid. So an investor invests in a project and they receive limited partnership shares. And those limited partnership shares that they have are not tradable. In some very selective circumstances, they could be sold back to the general partner. But this concept of liquidity, which the blockchain technology has kind of brought to the forefront, allows for those shares to be liquid, to be tokenized, and then traded between investors. So that's a newer, much newer concept. But talk to us, rather than talk to us about the technology side of it, talk to us about in the past, has the liquidity of investments in the private equity or in the exempt market space been a difficulty when it comes to a broker such as yourself? Or investors usually say, hey, this is a 5-year investment or this is a 10-year investment. My brokers have already advised me, so I'm okay with being invested in this deal. What has your experience been with investors wanting or needing liquidity?
Larisa, do you want to take that?
I may start. Definitely, we have terms: 1-year term, 3, 5, 7-year terms, right? And depend on the client's timing and risk tolerance. We might take 1 or 3 or 5 or different time terms. But you just mentioned the technology. Definitely, it's evolving and it goes into private equity space as well. And Investix, for example, right? They started providing the platforms that we can trade private equity on those platforms. So the technology is coming as well, I believe. It hasn't developed yet, and definitely we can't play the same as the stock market. Like today, if we invest it tomorrow, we can sell it. Probably it's not a wise idea. It's a little bit different concept, but technology, I believe, within next year will be massively changed, and there will be more liquidity in private equity space as well.
Great.
Rick, you go.
Thank you.
Yeah, and when we're finding something, if there's a disaster or there's an emergency for someone, quite often most of the private companies will give that investor their money back. But you got to make sure when you're talking to a client that they understand. I mean, if you're going to do a development, you've got to realize that term, they need to have that capital to do that development. But we are seeing, there's some companies that have monthly liquidity if it's necessary. Obviously, it's going to be, a little bit of a penalty if they're put it in for 1 month and want it back out in that month, and it's a 5-year term. But if something happens, most of the companies we deal with are receptive to, hey, the client needs the capital back. But again, it's educating that client and go, hey, this is a 5-year term. Realize that you're going to be locked in for that 5 years. And I mean, that's the risk of the private equity is liquidity, right? They call it all high risk, but it really isn't high risk other than liquidity. I mean, there's some good solid investments that are backed. I mean, what you're doing right now is backed by real estate. It's secured against a hard asset. So to say that that's super high risk, the regulators may call it that, but they haven't even looked at the project yet where they're calling it high risk, right?
Yes, great point.
Great point.
Yeah, talk to us a bit more about what your guys are focusing right now. What does take majority of your time, and now also on the educational side. Of course, you're out there right now adding value to our viewers, their investment journey. But talk to us about what you're focused on currently, and do you continue to be more vocal and be more available to kind of, again, add value and educate investors on options and possibilities that exist in the exempt market?
Yeah, I mean, that's one of the things, and unfortunately, we haven't been able to do that like we have in the past. But I mean, example, there's the Aram group, and there are 20,000 dental professionals, and they had an event in Whistler, and so we had a speaking and a booth set up there to educate people on some tax strategies and some opportunities in the private equity space. So it's a little more difficult getting out there now. We're part of the YYC study club here for them as well. So we present to the dentists and the dental professionals here in Calgary, where we've done some stuff. We'd love to sponsor stuff and get out there. Again, that is a bit of a challenge right now. And I do believe, the education is lacking with people not understanding the opportunities and where the big money is flowing into private equity and why it's going there. So that's been one of the challenges. I think the other thing that is a little bit, when I was in the stock market, I mean, I took technical analyst, I did ethics, I did my professional financial planner, conducts and practices. So we had to always get educated. And that's one thing I think that is lacking a little bit in private equity. I mean, I think we should always be learning and taking those CE credits and growing. So hopefully they'll grasp onto that. I mean, I always believe in educating not only myself, but my clients as well. And so, education is important.
Awesome. Yeah. The world, my university currently is the University of YouTube. So
Yes.
I've learned a lot about there. But we're getting kind of closer to the end. But let me ask a question. Let me bring an item up here, and I think Rick is going to concur with me on this item. But it's about women in private equity. Historically, you see private equity, the world of finance is being controlled by men. These big, strong men with in their suits and their dress shirts. But now, obviously, just on this video here, we see two women, Eva as the CEO of our company, and Larisa with her wealth of knowledge and experience and background. Tell us about both of your experiences. Larisa, please yourself, tell us about how was that transition? Was it difficult in any way? Did you feel any hurdles in the process? And how does it feel being a woman in private equity?
Well, the first conference I ever participated in the private equity was here in Calgary, like 4 years ago, I guess. Like really big one, 500 people, lots of famous people from Toronto, and about like 500 people. And I walked in the foyer, and it was like maybe 495 men and only 5 women I saw. And that was quite shocking. It was quite intimidating environment, but actually that was interesting. Now, 4 years later, how it has changed. Maybe I believe we have 1%, still 1, 2, maybe max 5% of women in private equity. But I believe we've been changing industry as well. We are smart, sophisticated humans, and we do definitely lots of work, financial works. We understand numbers, and maybe we drink less than men, work a little bit more. That's what I can add from my point. But so far, it's still very much men industry, I guess. They're alpha type industry.
You guys are the trailblazers. You're breaking the
And yourself as well, right? There's nothing wrong working with powerful women. I mean, they're powerful and smart. And I think one of the things I'm sure comes across with Eva as well is her intelligence. When you talk to her, she knows what she's talking about. She knows her industry. When you talk to Larisa, I mean, as soon as people talk to her, they realize, hey, I'm here with someone that's here, maybe even above me, not below me. And so I think she garners that respect, and I'm sure Eva does as well. As soon as you start, and I know I respect her as well, chatting with her and both of you guys as a team, very powerful. And I think the male-female dynamic brings a lot more to the table than just the old boys club, which it used to be, right?
As we love, we couldn't wait to have you guys on.
Yeah, truly.
And
and this will be great for Larisa and I to kind of start building up other women to take a step up and join us in the private equity space.
Yeah, both on the investor side and on the management side and kind of the broker side. So yeah, I'd love to kind of add value and possibly organizing a Canada-wide event when it comes to connecting women investors with women brokers and operators. So that'd be awesome.
Absolutely.
That would be fantastic. So we ask this question to all of our guests that come on. It's our favorite question to ask, and what is your number one advice that you would give to somebody looking to passively invest in real estate, completely as a passive investor?
Or it doesn't have to be real estate, but in an investment,
as
a passive investor kind of. And if you could get a version for both of you, that we would appreciate it.
Thank you.
Larisa, I'll let you go first.
Well, everybody needs to start investing as early as possible. Definitely brings experience, and real estate, it always should be 30% at least of your portfolio, we believe.
Got it.
Maybe it's more conservative, but real estate is definitely backed by assets, and we love real estate deals.
Awesome. In Vancouver, it would be 90% of your net worth would be in real estate because real estate prices are so expensive. But Rick, please go ahead. What would be your number one best advice to passive investors looking to invest?
Make sure that they're educated and really understand the investment, right? I mean, that's one thing I like about private equity is when you're in the public markets, I mean, you got to make a decision now because I mean, the stock could go up or down. But with private equity, someone when you talk to someone and you sit down and say, here's what we feel based on the KYC that we've done with you, but go home and think about it. I want you to put your head on the pillow at night and be comfortable and make sure you understand that investment that you're getting into. But also realize, I mean, as much as banks are there and they always will be, if you're not making, based on time and inflation, if you're not making 3% at least on your money's going the wrong direction. And I think people got to realize that they have to invest, otherwise they're losing money. So as much as they want to put in the bank and think it's safe, it's depreciating asset. And I don't think anyone wants that.
Great advice.
Great advice.
Great advice.
So
we want to thank you guys so much.
We really appreciate it. Also, as our communication and our application goes through with your firm, we would love to have you on again at some point after we have potentially worked together and you've advised us and helped us. So we'd love to have you guys on again at some soon point. But really appreciate you taking the time. It was very informative and educational. Thank you.
And we look forward to working with you guys.
Yeah, thank you both so much, and hopefully we get together in Vancouver here at some point. And I'm really impressed that you guys, you're not biting off a small piece here. You're doing 354 units, so I like that energy.
Thank you.
Thank you, Larisa.
Thank you.
Thank you, guys. Appreciate it. Look forward to working with you.
Okay, great, awesome.
Okay.